Welcome everyone to the National Real Estate Investors Group training video on high cash flow rentals. You're going to learn today how to find, analyze, fund, manage, and exit rental real estate investments with minimum risk and maximum profit. So let's get started. Let's learn some basic and advanced concepts for investing. Let's start thinking like a true investor. Remember, a true investor is somebody who creates value. We're not looking just for somebody who has a rental house. Create incredible cash flow using simple buy and hold strategies. And you can start this process part-time and keep your day job. We'll give you a plan on how you can retire in about 3 years, regardless of your age. And how the National Real Estate Investors Group and our community can help you. So the National Real Estate Investors Group is headquartered in Buffalo, New York. And Michael Harrington is the CEO. Here's the website, National Real Estate Investors Group, www.NREIGRP.com. So visit the website when you're done with the video. Now, about the company. We're a nationwide network of entrepreneurs, real estate investors, and business owners. We offer the #1 rated program to educate, mentor, and support individuals to become financially independent through investing and business ownership. Now, our career opportunity is we're looking for proven individuals to help with local and national expansion. So if you have experience in sales, marketing, business development, or even just a serious passion for real estate investing and helping others, we'd like to speak with you. My name again is Bill Omi, and you can see some of my little high cash flow rentals spread around the screen. I'm the National Real Estate Investors Group Sales Director. I am a senior coach and investor, a lifetime student, and most importantly, a value creation expert. So my background is I am a professional engineer, but I've been real estate investing for about 16 years. And why? Well, I got laid off from my engineering job after 23 years. I used to work 60 hours a week, 3 college degrees. I was the company guy. But as they say in the business, I got freed up to pursue other opportunities, and it's the best thing that ever happened to me. Now, before I started investing in real estate, I started investing in real estate books, CDs, courses. So how many of you have taken Carlton Sheets, Rich Dad, Poor Dad, Ron LeGrand, Dean Graziosi? There's probably 100 other folks out there that purport to teach real estate investing. Well, now I've completed over 100 deals, control 44 high cash flow rentals, and have collected over $3.5 million in rent. Guys, that's real money. And my favorite saying is, we don't know what we don't know. So let's learn some things that you may not know today. This is going to be great. Now, why should you even listen to this video? Well, I'll tell you why. Because we're going to show you a business model that thrived before, during, and after the great crash of 2008. So how many people thought that all real estate business went crash? No, they didn't. It just depended on your business model. And this business model will survive the next crash. You can operate this out of your home office like I do. You generate passive income. You get to help others, but you don't have any employees. So let's learn a simple workable plan for financial independence. And let's learn to create tax-free wealth instantly, then cash flow for life. Okay, high cash flow rentals. Now, look at this guy. Is that a happy guy? Do you want to talk about massive income? Passive income? Well, let's do this. Let's talk about creating massive and passive income as well as instant wealth. Oh, this is so much fun. So there's 4 levels of real estate investing. Here's a little background. Wholesaling, fixing and flipping, buy and hold, and money lending. Now, most of the TV shows and most of the courses you're going to hear about, they concentrate on wholesaling and fixing and flipping. Okay, well that's great, but that's earned income. Meaning, when you get done with a wholesaling or a fix and flip deal, what do you have to do the next day? Well, you better be finding another deal or your business is over. But levels 3 and 4, that's where the magic starts to happen. This is wealth creation and passive income. Folks, if you haven't enjoyed the benefits of passive income, you really owe it to yourself. So our goal in this community is to take you from earned income, which is having a job, to creating wealth and passive income. So again, that'll take you from a job to creating a legacy. Now, the reason this works so well is population growth is number one. There's demand for basic housing and it's going to remain strong. Second, the next financial crash, real estate will survive. This version of real estate will survive. And it even thrived in the '08 crash. Government confiscation. Okay, guys, listen up. The government, which tends to need a lot of money, may come after people's retirement plans. And it's a lot easier to grab your IRAs and 401ks if they're sitting in the mutual funds or stock market. Go look up Cyprus. This is what they did in Cyprus. Then to get hard assets like real estate. Government's lousy at taking care of real estate. So let's look at the tax advantages. The tax advantages are unbelievable. Depreciation, long-term capital gains. You can even inherit these properties with no taxes at all. And this is amazing. When I figured this out, it was an epiphany. There's no tax on creating wealth. You can create millions of dollars in wealth and never pay a dime in taxes, and we'll teach you how. Finally, you get to create your wealth instantly. You don't give it to a money manager and hope that in 30 years it's going to go up in value. You create it on day one, and I'll show you how to do this. And then you maximize cash flow so the money keeps rolling in. You are in total control. So let's talk about retirement plans with high cash flow rentals. Well, everybody's been taught to have an asset-based retirement account. That's what your mutual funds, your 401ks, your IRAs, this is what Wall Street teaches you. This is what the financial gurus on the radio teach you. Well, wealthy people do it a little bit differently. They concentrate on cash flow-based retirement. And let's look at the difference. Under an asset-based retirement account, it's based on savings. We're talking about scarcity mindset. You've got to give up something now. You've got to live below your means. Wealthy people don't do that. What they do is they create value. That's an abundance mindset because the amount of value that you can create is infinite. You never have to live below your means. Poor folks, actually most folks, focus on income taxes because taxes are a big part of their lives, whereas wealthy folk focus on cash flow and write-offs. This is huge. Asset-based retirement accounts usually buy the assets at full value. You buy a stock or a bond or a mutual fund. You can't get it at a discount. You've got to spend 100 cents on the dollar and hope and pray that it will go up in value. Wealthy people have this figured out. They buy, or better yet, control the assets at a deep discount. So they create their wealth instantly. Poor folks hope for growth, right? You buy that stock, you buy that mutual fund, and then you watch the papers and the news, and year after year, you're hoping something's going to happen. Cash flow-based retirement accounts, wealthy folks just buy assets at a discount and they create their wealth instantly. And I'll show you a perfect example after we get done. This is a huge one. Asset-based retirement accounts are obsessed with liquidity. They always want to be able to sell. So if the market crashes, they can sell. Wealthy people create their own liquidity. It's called cash flow. So there's never need to sell during a crisis. Asset-based retirement accounts, your typical account, is available or is used to try to avoid high income taxes. But when you base your retirement account on cash flow, you have low income taxes. You're taking advantage of capital gains and other tools that the government puts in place for rich people. This is huge. Everyone who teaches you about retirement right now says you have to be old to retire. You have to put money in when you're in your 20s and your 30s, and then hope that it's going to go up in value so you can retire. Well, if you're 40-something or 50-something, you missed that window. So you might want to consider a cash flow-based retirement account. Because once you establish enough cash flow to replace your income so you don't have to work anymore, you're done. It doesn't have to be when you're 65. It can be when you're 35. Here's a big one. Under the asset-based model, when you hit 65 and you start spending your money, you're depleting your nest egg. You're depleting it. It's going down in value. But if you do things according to the cash flow-based model, your portfolio will be growing. And what this all results in is under our present model, the asset-based model, you have no control. You've given up control to Wall Street, to your money manager, to the banks, to the government, and you have total stress. Whereas under a cash flow-based model, you have total control and you live a life of confidence. So let's take a look at asset-based versus cash flow-based. This house, this little rental house, is worth more than $500,000. Allow me to explain. I actually bought this little house for $28,000. Its fair market was $79,900, and it will rent easily for $650 a month. So, how can it be worth more than $500,000? Well, $500,000 cash in the bank at 1% today, which is the going rate, will generate $416 a month for you to spend. Whereas that little house for $28,000 will actually generate $500 a month net. So a $28,000 house will generate more income than $500,000 in the bank. Oh, but it gets better. $500,000 depreciates because the Federal Reserve is keeping interest rates below the rate of inflation. So you're losing money every month due to inflation, yet the house, the asset, will appreciate. In fact, with the stroke of a pen, I created a 185% return on my investment instantly. How long would it take you to make a 185% return on that money? You couldn't, because it's going down every year. You had to buy the $500,000 at par. In fact, worse than that, you had to earn the $500,000, many times pay taxes on it, and then you still had that asset at par. Whereas bought that house for $28,000, that was 35 cents on the dollar on day one. And if you're concentrating on that cash in the bank, you're worried about paying taxes as you pull it out, whereas the house provides you with big write-offs. Do you see the value here? And we're going to teach you a mortgage acceleration strategy. So even if you bought this house and had to borrow money for it, we're going to teach you how to use the cash flow from the house to pay it off in 3 to 5 years or less. It's a great program. So let's take an example of today, though. Honey, we need a new car. This is something my wife came to me the other day, and I said, okay, I'm game, but first we need a new house. Well, what do you mean? I said, well, we're going to buy this little house, this little cash flow generating machine, and that cash flow will pay for as many cars as you want. In fact, here's the car that my wife likes, which is the Toyota Sequoia. It's about a $55,000 car. This one asset will pay for this car for the rest of her life. So let's look at this. This is actually house number 63. I just bought it a couple days ago. 3 bedrooms, 1 bath, 1,000 square feet. Asking price was $39,900. But I bought it at a discount for $18,000. Now the tenant has an option to buy the property in the future, so they paid $1,000. So my cost basis was $17,000. Now I could have borrowed that money. Now, but here's the cool part. The rent on this little house is $695 a month, say $700 a month. So that nets about $7,000 a year. So $7,000 a year on a $17,000 investment means the annual return on investment just from the cash flow is 41%. Hey folks, how many of those stocks, bonds, and mutual funds are cranking out 41% a year, year in, year out, without all the drama from the Wall Street casino? But it gets better. So since the fair market value is 49, I just created $31,000 in wealth, tax-free, instantly, with the stroke of a pen, and it wasn't even that nice of a pen. 31 grand instantly. Do you see how wealthy people do things versus poor people? How long would it take most people to work for $31,000? That's an instant 188% return on my wealth? How long will it take the stock market or mutual funds to go up 188%? I'm sure it's not instantly. But here's how we pay for the car. The $17,000 invested, which spins off $500 a month, is a monthly car payment for the beautiful Toyota Sequoia. That means the tenant will pay for the new cars forever. Invest once and benefit for as long as you want. That's what high cash flow rentals will do. So, how can you create incredible wealth and cash flow with these high cash flow rentals? Well, if you work with us, you're going to learn how to find the deals. Finding the deals is so easy. You're going to learn how to analyze the deals in a simple three-step process. Funding the deals, that is the easiest part. Most people think it's hard to fund real estate. It is the easiest part. Manage the deals, and finally exit the deals. So here's an example of another high cash flow rental. This was house number 57. This was an REO from the banks. It was listed for $69,900. The bank actually had lost it or the owner had lost it on $105,000. Bank wanted $69,900, 4 bedrooms, 3 baths, 2,100 square feet, central air, Roman tub, granite countertops, fireplace. This place was beautiful, but this is the best part. The future tenant calls me and says, hey, they just dropped the price to $19,900. I purchased that property for $12,700. So the purchase price is $12,700. It easily rents for $600 a month, which will net, remember, not gross, this will net with all expenses, taxes, and insurance paid, $6,000 a year. The tenant has an option to buy it in the future. So on $6,500 created, that's a 51% return a year. Folks, most rentals you're looking at, landlords are losing money every month. They're kidding themselves. How would you like to turn out 51% a year, year in, year out, while you're helping other people? Now, this is what's the best part, though. The fair market value is $59,900. That means I created $47,000 in wealth instantly. Again, another $47,000 tax-free with the stroke of a pen. How much taxes do I pay? The answer is 0. So I created a 272% return on my investment instantly. Folks, are you getting the picture that your Wall Street guys and the government and all the gurus are taking you for a ride? They are, because they don't make money when you invest in real estate. They only make money when you invest in paper assets. And by the way, I think that's a contradiction in terms, paper assets. So let's continue on. And I have a little saying, I love mobile homes. So you could put these into your IRA. We can show you how to self-direct your IRA. So you could be putting assets that are making $40,000 returns instantly in either an IRA or an HSA, generating 51% a year within that retirement account. So how many of these deals should you do? As many as you can get your hands on. And if you learn to do it, they're all over the place. Oh, but if you ask me, you say, hey, wait, Bill, there's no high cash flow properties in my area. Well, let me make 3 suggestions. Partner up with someone who does live in an area. The half of the country has these type of deals. And the other half, well, you need to partner up with us. Move! Folks, you'll move across the country for a crappy job that you'll get laid off from in 6 months. Why not move someplace where you could build an empire with these type of properties? Or partner up, select a remote property manager, and we'll teach you how to groom that property manager, because one of the biggest risks, if you're going to have a property manager, is the property manager themselves. So, now that you've seen this, I hope this has stretched your mind a little bit. I hope this has piqued your interest. Take the next step. Join us every Thursday at 6 p.m. Eastern Time for our cash recovery and debt elimination workshop. Now contact Mike Harrington. He'll be waiting for your call from the National Real Estate Investors Group, Buffalo, New York, to RSVP for our workshop and for directions on how to get to our office. Here's our email address. It's actually Mike's email address, and here's our website. So this has been Bill Omi. I am actually in Georgia. And I've been your host tonight. I hope you've gotten something out of this, and I hope to meet you at our cash recovery and debt elimination workshops. So it's been my pleasure to be your host, and I look forward to working with you.